and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space. The Supreme Court throws a spanner in the works for Byju's fundraise via stake sale in Aakash Educational Services. The top court restrains Aakash from removing veto rights of minority shareholders opposing the deal, directs Aakash to seek relief in the NCLAT.
Nazara closes a 855 crore rupee funding round. Fundraise to be used for its acquisition spree and global expansion. SBI Innovative Opportunities Fund invested 220 crore rupees, while Juno Minato Finsol infused 150 crore rupees. Investment firm Think Investments pumped in 150 crore rupees.
Stellaris Venture Partners closes its third fund of $300 million. The early backer of Mamaearth and Whatfix will invest in 25 to 30 startups over the next 3 years. It has backed 44 tech startups across two funds, 60% of which were inception stage businesses.
Cardeco Group posts 340 crore rupees in consolidated losses in FY24 versus 560 crore rupees in the previous fiscal. The auto tech and fintech solution provider records a profit of 37 crore rupees in FY24 as against a loss of 143 crore rupees in FY23 on a standalone basis.
And Australia passes a legislation to ban social media for children under 16 years of age, becoming the first country to do so. Facebook's parent company Meta accuses Australia of failing young people by not considering their voices.
Those were the headlines that we're tracking for you from the startup world. But the top story today, a big setback for Byju's. The Apex Court has directed a stay on a resolution to sidetrack minority shareholders to facilitate stake sale in Aakash Educational Services. This move comes days after the National Company Law Tribunal blocked Aakash from amending its Articles of Association to remove the veto rights of these shareholders. Now, the NCLT's interim order also stops any changes to Aakash's governance structure until its final decision.
All right, and what's brewing today? Stellaris Venture Partners, which is an early backer of companies like Mamaearth and Whatfix, has announced the close of its third fund of $300 million. Now, in continuation with its early-stage tech investment strategy, it is going to invest in about 25 to 30 startups in the next 3 years, and now it has more than $600 million in assets under management. Since its inception in 2017, it has now backed 44 startups across its two funds, 60% of which were in inception stage. For more on the new fund and the investment thesis, joining me now is Rahul Chaudhary, partner at Stellaris Venture Partners. Rahul, welcome to Startup Street. Thanks very much for your time here. Tell us about this third fund of $300 million. It's a fairly large sum of money you've raised. How easy or hard was it to get this money in the environment? Was it in line with what you were expecting? And who were some of your big sponsors?
So thanks for having me on the show. No fundraise is easy, and it is a liability, or in some sense a responsibility we take when we raise money from a global pool of capital. For us, this time what we were able to attract were some of the most well-known LPs. They have an option to invest anywhere in the globe, and convincing them to invest in us was a big achievement. In terms of strategy, we'll continue investing behind early stage, and which is seed to Series A is what our core focus has been over the last 8 years. And that's what we want to do going forward as well. While I can name the exact LPs, these are endowments, pension funds, global fund of fund, kind of LPs that we have on the investment in the fund.
All right. Rahul, you have plans to back about 25 to 30 startups in the next 3 years with this money. We know the overarching theme of tech that you're excited about, but what are the sectors where you see most potential, and how soon are you going to start writing these checks?
So the good news is that we've already written our first check. So we have opened the account and invested in a very interesting company that is using AI for test automation. And AI as a theme is something that we have been extremely positive about. Even in our second fund, there have been multiple companies that are AI first businesses. On the software side, we have companies like Orbit Shift. On the consumer side, we have companies like Dashtune. On the entertainment piece and healthcare, we have companies like Carpel and so on. And that is one broad theme that we'll, both on the enterprise and the consumer side, stay excited about. The other one is consumer businesses. Again, India is a large market and consumers are deprived of options. at multiple income strata and so on. And so we'll continue to invest behind those companies. The third theme, and that is where, the whole digital public infrastructure that has been created for India, large companies can be built and already been built, and new companies will get built both on, on things like UPI, the whole Aadhaar system, the new systems like FASTag and so on, that we think will allow new companies to get built. So these are the three broad themes that we'll continue to invest behind in the third fund as well.
All right, so AI, consumer, fintech, all of those are focus areas. But, I'll go back, Rahul, to what you started with, that, this is a liability, this large sum that you raised now, and there are expectations of returns. Tell us what those are from the third fund, and also tell us what about the earlier funds, what kind of returns have those generated, and if the third fund promises to do better?
Well, we hope every fund is better than the prior one. So yes, that is the attempt. Again, I can't put exact numbers, but first fund that we raised, we have had 3 large companies already out of the 19 that we invested in. We had Mamaearth, which clearly paved the way for new set of IPOs that happened over the last year or so. We have Whatfix, which is the market leader in the category globally. We have Propelled in the lending side on education lending. So there are already 3 large winners out there. In the second fund, again, companies like Kiwi, Carpel, Dashtun, Nest Asia, Zook, multiple businesses which are doing very well. And clearly, as we were raising our third fund, the amount of return we were able to generate in our first fund was a big reason why LPs were excited about to invest in us.
All right, Rahul, quickly before we let you go, what about the exits, from any of your earlier funds and also from your current portfolio of companies from the last 2 funds? Are there any that are looking to go public in the near term?
So, as you mentioned, Mamaearth, that was a public market that, they went public last year, and that was a big exit for us. Whatfix is the other company that is planning. Again, it will be a very unique IPO. They are domiciled in India, so they'll likely list in India as well. And it's a business, as I said, is a market leader. So maybe another year or 2, they'll be the next candidate to go public. And our hope is that, every 2.5 years, we should be able to create one large exit amongst the portfolio that we're investing behind.
All right, Rahul, that's all the time we have. But thank you very much for joining us here, and we wish you the best with this Fund 3 that you've just announced. Thank you.
Thank you.
All right, moving on, Bengaluru-based rapid food delivery startup Swish has raised $2 million in a seed funding round that was led by Accel. This money is going to enable Swish to expand its operations and scale its rapid delivery model. So by March of next year, it plans to expand to about 150 centers in Bangalore and then plans to expand to other Tier 1 cities. For more on this, joining me now is Aniket Shah, who's the CEO and co-founder of the company, and also with me is my colleague Arundhati. Aniket, welcome to Startup Suite. It's a very new company. You've just started this year. Tell us about your rapid food delivery startup, the idea behind starting this venture, and what you're doing differently from, the many other players already present in this ecosystem.
Thanks for having me. I think, it's been a short stint of like 4 to 6 months since we started the company, and since then we've seen like crazy growth. I think since the last couple of years, with the behavior shift that has happened because of like big commerce, I think most of us have been used to like getting things delivered faster. I think food as a category is like a very craving category, and I think we've been able to delight a lot of people in the last 3 months by delivering food in 10 minutes.
Right. Hi, Aniket. Arundhati just stepping in. So far, Swish is limited to sort of a handful of areas in Bangalore like HSR and Bellandur, right? So what are your long-term and medium-term aspirations? How large do you hope to grow your operations?
Yeah, we are live in 3 areas in Bangalore and expanding to all the other areas very soon. Plan is to take 150 delight centers live over the next 4 months. Essentially, we see like a lot of new use cases being set up because of our 10-minute food delivery model, be it midnight cravings, be it quick snacks or in the office, or coffee between your meetings and all of that. So I think that is something that we've been able to create because of our model.
Well, Aniket, this $2 million in seed funding that you've raised, we understand, of course, you're looking to use this money to expand. But what are the other Tier 1 cities you're looking to enter after Bengaluru? And how soon will you do that and adapt your model to different consumer behaviors in these new markets that you enter?
Yeah, I think we're going to expand to all the major tier one cities very, very soon. I think the plan is to like start in a couple of more cities in the next 3 months. I think that is what we're planning internally, and I think we'll have to adapt definitely to like the consumer preferences of food and taste in every cities that we launch.
Right. Also, Aniket, the quick commerce market is extremely crowded, right, with players like Zomato and Swiggy. Sort of what sets Swish apart, and how do you plan to fend off competition from larger incumbents over time as you scale?
Yeah, I think we operate on a fully end-to-end own model. Our approach is full stack. We essentially operate optimized and modified cloud kitchens, which we call as the light centers, and control the entire preparation of food, preparation, quality, hygiene, packaging, and delivery to ensure that the right food, tasty, delicious food reaches to consumers in like 600 seconds.
All right, Aniket, in the quick commerce space, it's a huge cash burn business. Players are operating with very thin margins. Give us a sense of what plans you have in terms of achieving profitability. Of course, you've just started. It may take a while. What is the sort of path to profitability while you maintain these ultra-fast deliveries across the cities that you expand in?
Yeah, I think we're in a good category. I think food and beverage typically industry has about 70% gross margins to operate with. So I think we'll be able to do a lot better in terms of like operating with high gross margins and net margins.
Right. So, and Aniket, what about like the goal for the medium term? What's the 1 year mark? How do you plan to expand in the near future?
Yeah, as I said, I think we're planning to open like 150 delight centers in the next 4 months. I think at the same time, the focus is fully on ensuring that like people just love our food and people just come back on the platform. I think we want to make sure that we become the most delightful food delivery platform in the country.
All right, Aniket, we wish you all the best on that. And we're completely out of time. Thank you so much for joining us on the show today.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, Blitz, a leading quick commerce logistics enabler, has raised 51 crore rupees in a Series A funding round led by Ivy Cap Ventures. We put the founder on the hot seat to find out their growth plans and how they will utilize these funds. Stay tuned. Welcome back. You're still with us on Startup Street. Blitz, a quick commerce logistics enabler, has raised 51 crore rupees in a Series A round led by Ivy Cap Ventures Advisors Private Limited. Existing investors, India Quotient and Ulterior Capital. Existing angel investors and other notable angels, including Ramesh Bafna of Zepto, Siddharth from Snitch, also participated in the round. Founded in 2020, Blitz connects brands and consumers with 60-minute deliveries from local stores and same-day shipments from urban warehouses. Joining me now to discuss this further is Yash Sharma, the co-founder of Blitz. Yash, thank you so much for taking time out and being here with us on Startup Street. Before we get into all the details, if you could tell us, it is a quick commerce logistics enabler. Can you sort of take us through the kind of services you have on offer and the kind of efficiencies you're bringing in for your clients?
Yeah, sure. First of all, thanks for having me here. What we at Blitz do, we enable quick commerce. That is, we help you deliver products in 60 minutes from your retail stores, your facade outlets across the city to the nearby customers. Plus, we also enable you to deliver parcels in same day, that is 4 hours, 6 hours, from your warehouses in the outskirts of the city. To enable even faster deliveries for the emerging D2C brands, we offer dark store solutions where they store where we help them store the products inside the dark stores and enabling 60-minute deliveries from the dark store to the customers in the nearby catchment. So in short, we help them deliver faster at a much more affordable price point. We have seen all the brands who are adopting to quick commerce now, they are seeing a 50% reduction in their return rates and overall around 25% increase in their website conversions, which demonstrates how consumer behaviors are shifting and how consumers are now caring more about speed than about the price sensitivity on the product itself.
Right. And quick commerce is the big buzzword right now, right? So if you could sort of give us a sense of the kind of clients you're servicing and across which sectors, what's the demand been like? What's the kind of demand you're witnessing and how many cities are you present in?
So we are present currently in 7 cities, Bangalore, Bombay, Delhi NCR, Hyderabad, Jaipur, Chandigarh and Pune. Our plan is to expand to 20 more cities by end of next year. In all these cities, we cater brands like Purple, Decathlon, Adidas, Puma, Healthcard, Jiva. So with these brands, we offer them solutions ranging from 60-minute deliveries to 4-hour deliveries, depending upon a brand's appetite. Now, brands, they see an immediate impact, and then they want to start and scale these services in more and more cities. And that's what this fundraise was all about, on how we can delight our existing customers, existing brands in more than 7 cities where we are already present in.
Right, so hope to be in many more cities by next year, but you've raised this 51 crore rupees, right? And primarily it's also to drive the expansion of your dark store network across India's top cities. This is one of the few things that you're going to spend your money on. So if you could sort of take us through how you plan to use these funds that you've raised.
So first part definitely is geographical expansion, from moving from 7 cities currently where we are present today to around 20 cities. We will be expanding the cities like South Kolkata, Lucknow, Chennai, Kochi, Thiruvananthapuram, Indore, Ahmedabad, and many more. The intent is to ensure that each and every customer of the country should be able to get products in 60 minutes to 2 hours. Additionally, we are also innovating a lot on our technology, where we are making the riders the kings. The delivery riders, they would be able to get the right trips, right prices for doing those trips across the city, ensuring that they are also delighted and they are also happy, catering the needs of these brands and these marketplaces directly through our platform itself. So technological expansion and geographical expansion is what we aim to do.
All right. And, also if you could sort of elaborate on your dark store model, right? How many dark stores do you currently have? And how many do you have, hope to have by the end of the year? Are you well capitalized for this as well?
So we currently operate around 8 dark stores spread across 7 cities. Now we are going forward to open up 30 more dark stores, and we'll be having 40 dark stores spread across 20 cities by the end of next year. The smaller cities, the tier 2 plus cities, will have 1 dark store each in the center of the city. And the larger metro cities, they will have around 5 to 6 dark stores spread across the city itself. This will allow us to enable each and every corner of the city in 60 minutes to 2 hours.
All right. And, if you could take us through your revenues, where are you at currently and where do you hope to close this year? What's profitability looking like?
So this fiscal year, we'll be closing somewhere around 70 crores of the annual revenue. And with this fundraise, we are aiming good growth. And you would see we will grow almost by 10x in the next fiscal year. So March 2026, we would be exiting at 500 crores of annual ARR. To achieve this, we have to build a lot, we have to scale a lot. And that's what this fundraise is all about. So yeah, all of the team members are very excited, and we are seeing a great demand in the market and a great movement, especially from traditional brands like Shoppers Stop, Pantaloons, Urban Fashion. So these brands, they realize the potential now because their retail stores are already present across, and they just quickly want to enable their customers with faster delivery solutions.
So everyone jumping on the quick commerce bandwagon at this point. But, if you could sort of tell us, how big is this opportunity? Because the quick commerce space is, highly competitive. So how are you taking on competition and how big of an opportunity do you see here?
Right. So quick commerce as a space, there are, emerging marketplaces like Zepto, Swiggy, and Blinkit, which we have all seen. These marketplaces, they are taking the market forward. They're setting the consumer expectations. What we wish to aspire is we want to get the accessibility of enabling quick commerce to each and every brand, each and every traditional enterprise, as well as larger marketplaces who cannot do it by themselves. So for us, we see that the current market potential is at around $3 to $4 billion, which is essentially 5 to 7% of the total e-com market. But the most surprising fact is that this has grown almost by 3 to 4 times in the last 2 years. And we are seeing that this will grow almost 10x across next 5 years. And that's where we wish to be at the center of it, enabling more and more brands, more and more marketplaces, which will also allow us to grow 10x in the next 2 years.
All right. So you hope to grow 10x in the next 2 years. Yash, thank you so much for taking time out and being with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you. Thank you so much.
Well, it is Friday, so let's also take a look at the big fundraisers in the startup world from the week. Now, according to data from Venture Intelligence, Indian startups raised more than $750 million from 14 deals this week. Some of the notable ones include mobile credit card issuer OneCard, which raised $28.5 million from Better Tomorrow Ventures, Z47 and P15 Partners. Toy maker Candy Toy Corporate, they secured $13 million from 6 Sense Ventures. Commercial EV leasing company Alt Mobility, they backed $10 million in a Series A round from Eurazeo EV2 Ventures, Shell Technology Ventures and Toynam.
You know, also on that list, Ritu, is e-commerce enablement company ShopDeck, which raised $8 million from Bessemer Venture Partners, Elevation Capital, VH Capital and Chirate Ventures. Cross-border specialty chemical distribution platform Alchemy added $5.6 million to its wallet from Prime Ventures and InfoEdge. Indian startups have witnessed 80 deals in 2024 so far, worth over $10 billion, according to Venture Intelligence. And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching. More news and updates coming up on the other side.